Hi everybody, welcome back to my channel. In this video, I'm going to respond to a question that someone asked me. As you can see here, Shiraz Ali says, Step X, can you do a video on how you search for a stock and be able to tell if it's going up or not? I've never heard of some of these stocks and would like to know your thought process behind the decision to invest in it. This is a very complicated question to answer because obviously my thought process behind how I invest, it took many years to develop and get to this point, right? And I've already made a video talking about what I started investing in, the strategies that I used, the things that I researched to get to where I am now. I'll leave a link to that video in the description. But I think in order to start off answering this question, I will answer it in parts, so I won't go over my entire thought process because that's impossible to do in one video. But I will start off by talking about one part of this question, and it's very important because he's asking me, how do you search for a stock and be able to tell if it's going up or not? So this is a very important part that I want to address. Now let's look at my portfolio. As you can see, I invest in spreads, so IPOD, 7.5, $10 call debit spread, Affirm call debit spread, Alibaba call debit spreads, GSAH spread. So my portfolio is pretty much all spreads, right? Now the thing about that is, if we look at the call spread calculator, let's go with Affirm, for example. I like Affirm stock and how it's been performing. So Affirm right now, it's at $76.38. That's the current stock price. The long call, we're gonna buy, let's say January 21st, 2022, the expiration date. And let's say we're buying the $45 call. And then the short call, we're writing, let's say we're doing the $70 call. The spread price, $15. Let's calculate that. So here's the chart. The entry cost, $1,500. Maximum risk, $1,500 at a price of $45 at expiry. Maximum return, $1,000 at a price of $70.02 at expiry. Break evens at expiry, $60. All right, so let's take a look at this. Now, if you see the chart, the dates are on top. So May, June, July, August, September, October, November, December, January. Now over here in May, remember, right now the current price of Affirm is at $76.38, right? So it's around here. Now over here in May, the profit and loss, it's only like 3.4%, 8%, down 6.47%. It's pretty minimal, right? However, May, June, July, August, September, November, December, January, as you get closer and closer to the expiration date with the spread, now you see 65.5%, 66.6%, minus 90%. So as you get closer to the expiration date, this is where the bigger returns and losses happen. Not over here in the beginning, but as time passes and you get close to the expiration date, this is when you know what the big profits and losses are, all right? And at expiry, if it stays the same price, if a firm stays at around, what is it, $76, let's say that a firm stays at around $76, 75 even, I would have a 60.8% return. Now, let's say a firm goes up and it goes to $120. $120, I would have a 66.7% return. However, what if it doesn't go up? What if it goes down? If a firm goes down to, for example, $66, I would get a 33.4% return. So as you can see, if it stays the same price, I get a return. I profit. If it goes up in price, I make a profit. And even if it goes down in price, I make a profit, as long as it stays above the break-even price, which I believe it says was $60, right? Yeah, break-evens at expiry, $60. So my strategy with investing in spreads, as you can see, spreads in my portfolio, I don't need stocks to go up in value. I don't. So when you're first starting to invest, a very simple strategy that people talk about is buy low and sell high, right? You buy a stock and then you hope it goes up and then you sell it at a higher price than you bought it at, and that's how you make your profit. However, spreads are a little more advanced, and they're very different from how you would usually invest, because I don't depend on stocks going up. I don't need the stocks to go up. So when you're asking me how you search for a stock and be able to tell if it's going up or not, the answer is I don't need it to go up. I don't. I just need it to stay above a certain price. If it goes up, I make a profit. If it stays the same price, I make a profit. And even if it goes down, I still make a profit, as long as it's above the break even. Let's do another example. Let's say, for example, United Airlines. So UAL, get price. Right now, United Airlines is at $53.49. Choose the option to buy. Let's say December 17th. We'll buy the $40 call, and then we pick the one that we write or sell. Let's do the $50. All right, so as you can see here, it's going to be a net debit. Calculate. So entry cost $618, maximum risk $618 at a price of $40 at expiry. Maximum return, $382 at a price of $50 at expiry. And the break-even price is $46.18 at expiry. Again, up on top is the time, the months, right? April, May, June, July, August, September, October. And over here is the price, the stock price. So right now, United Airlines is at $53. All right, so it's at around here, $53, $54. And like I said earlier, in the beginning, when you're starting out, the gains and losses are pretty minimal. However, as time goes on, right, if we go over here to December, this is where we see, 61% gain, 100% loss, things like that, right? So at expiration, or at least close to expiration, that's when it really matters. So United Airlines is around $53 right now. If it goes up in value, let's say it goes up to $70, I make a 61.8% return. If it stays the same price, let's say it stays at like around $54, I make a 61.8% return. And even if it goes down, let's say it goes down to 48, I still make a 29.4% return. So as you can see, it can go up, it can stay the same price, it could go down. All I care about is if it stays above the break-even price at expiration, then I'm going to make a profit. So I hope this clears things up, and I hope this, opens your eyes to the way I invest, because the way I invest does not depend on stocks going up. I don't need stocks to go up. I don't. My style of investing with spreads, I just need stocks to stay above a certain price or to be within a certain price range. But yeah, I don't need stocks to go up. That's not my strategy at all. So I hope this answers part of your question. I'm going to make more videos explaining my thought process behind the way I invest and things like that. But at least in this video, we address the situation of how I search for a stock and tell if it's going up or not. And the answer to that is I don't look for stocks that I know that I can tell is going to go up. I just need stocks that I believe that will stay above a certain price. Alright, that's it now for this video. Like I said, I will continue to make more videos on my thought process behind how I invest in stocks. But I hope this video at least helped a bit. Alright, thanks so much, and I'll see you guys in my next video. Bye.